We had talked about investments, and this forms the basis for this afternoon's discussion. We're taking a look at if you're interested in investing, but you don't know where or how to start, then this is the discussion for you, and you should listen keenly. Right now, we're joined in studio by Kenneth Muchina, the CEO of Funguo Investments Limited, as well as Christopher Groon, who's the CEO of Barani Capital. Many thanks for joining us this afternoon.
You're welcome.
Allow me to begin with you, Chris. Now, first of all, what is investment in general, and how do you choose the perfect investment for yourself?
Sure. Well, I can't necessarily say that there's such a thing as the perfect investment, but there are certainly investments that fit each investor better than others. So I'll give you a quick example. Many people, they think that buying a car, for example, is an investment, but a car, the moment you drive it off the lot, it loses about half its value. So it can't really be considered an investment. It's an expense, and it may be necessary, and it may increase productivity, but it technically wouldn't be considered an investment. But I would look at what your needs are, how you perceive and how you deal with risk. If you don't mind, waking up in the morning and finding out that something that you put money into, maybe it's down by half. If you can handle that, if you can sleep at night with those types of moves. But even in that case, you wouldn't put all your eggs in one basket, as they say. You want to be well diversified across different types of investments.
Kenneth, you've been in the industry for quite a while now. When you look at the history of investments and how that has transformed and evolved itself, how would you say that the trends have changed, considering that now you can even buy bonds online?
Yeah, thanks, Maya. I would say the investment space or the investment landscape has changed in a number of ways. One, we have more products. As recently as maybe about 10 years ago, the go-to place was mainly bank deposits, the listed shares on the Nairobi Securities Exchange, and property. Today we've got more assets. We've got efforts being made by the regulator and industry players. By the regulator, I mean the Capital Markets Authority, to expand the space and have more products available. And finally, I would say technology, as you've noted, it's coming into play. There's an attempt, or there's been efforts being made to make bonds investment, for instance, possible on their mobile platform.
Chris, even as Kenneth talks about some of the new trends that are coming up, we also have other ways of investing, like Bitcoin, which weren't there before. What are your opinions of such investments?
Right. Cryptocurrencies, that's an interesting one. It seemed, I would say a few years ago, it seemed like a very speculative place to put your money. But then I came to the conclusion that something like a cryptocurrency, or really any type of currency, what should it be worth? And I came to the conclusion that it's the total amount of the goods and services which can be purchased in that currency divided by the number of units. And so as Bitcoin has gained more and more adoption and is being used in everyday life, I think that it could be justified, the values that it's at. And also in terms of utility, in, for example, countries where people are largely not banked and don't have access to many types of financial services, they're able to use Bitcoin. It's a sort of an open source version of the banking system. So as far as some of the other cryptocurrencies, I'm a little more skeptical, again, for that, because of how I've defined them. But I think Bitcoin, it's still up for debate, and we'll see. I guess we'll know in the next few years.
Kenneth, one of the most famous sayings when it comes to investment is the higher the risks, the higher the returns. What are your views on this, and what does that really mean?
I think a lot of studies by people in the world of finance have shown that indeed, for you to take a higher level of risk, you demand higher return. And generally it follows that path. But there's actually an interesting contrarian view that says it's not necessarily the case, that sometimes you don't have to take higher risk to earn a higher return. But generally, yes, that's a case that lower returns, lower risks would typically go with lower returns. So, as an example, if you're looking at buying into government paper, treasury bills and bonds, these are generally taken to be low risk. And generally the returns relative to other assets, say corporate bonds, that's bonds issued by corporate entities, or real estate or private equity, whose risk is deemed to be higher. And for those who know how to price it, they will typically demand higher returns.
Chris, even as you talked about some of the risks that are associated with investments and how ready you have to be for that, a lot of research has shown that investors sometimes do make investment decisions based on emotions. How do our emotions affect the investments we make?
Sure, definitely. Yeah, it happens even with professional investors. There's an entire sphere of academic studies called behavioral finance. And it's still a pretty young area within the finance, academia, but we're still trying to understand why people make those types of decisions. You could consider it gambling. You know, people get a excitement out of gambling and winning versus losing. But what I would say is that I've spent more of my career advising institutions who usually have a process. They don't just wake up and decide to do something. They've been following some sort of a process which has worked for them in the past, and so it tends to sort of steer them away from things that go against their values and their beliefs in terms of the types of investments they should be making. And I would say maybe at an individual level, take a breath. If you hear about something that sounds really exciting, where you can make a lot of money in a short period of time, maybe sleep on it. If it still seems like such a good idea, or particularly if you talk to some of your friends, then maybe put some of your money, not all, but put some of your money there. But I would say don't try to avoid impulse decisions.
Kenneth, I see you nodding your head there as Chris talks. Your advice in terms of how you can separate your emotions from investment decisions?
I would say, borrowing from what Chris has just mentioned about how corporate entities, or call them institutional investors, go about making their investment decisions. Even at an individual level, I would ask that any individual, one, you have a plan. What does this entail? What do you want out of investment? Different people, depending on usually their age, their family situation. If you're married with young kids who are about to go to school, who are in school, your needs when it comes to money would be different from someone who is higher up in terms of the age scale. Someone who is retired, someone who is done with their mortgages. And therefore your objectives when it comes to investments, what you want out of your investments will be informed by your age and basically your commitments, your financial commitments. That being the case, once you know what your objectives are, you then go about looking for investments that help you meet that. So that will define the level of returns that you want, that will define the level of risk that you can manage. Your income levels or assets that you control at any one point in time will also be important to that decision. So I would say plan. Make sure the planning, if you can afford it, you've got the support of a professional who understands, someone who can sit with you, listen to you, not just sit with you and push a product to you, but sit and understand what Maya wants, why Maya wants this, and who can sometimes either tell you this is right, this is wrong. If that happens, then it's possible, for instance, to avoid the pitfalls that Chris mentioned of, something is hot, it's a flavor of the month, and everyone is running to it, and you say, let me put my money into it. Generally, those kind of things end up benefiting some people, but actually a lot more people lose their money in the process.
All right, let me just interrupt you right there just to give you a quick update on what's happening with the SRC. Now, SRC Serum says the public wage bill has risen from 465 billion shillings and will hit 650 billion shillings by the end of year owing to devolution. So that's just an update on that. Now, just as we continue with our discussion, Chris, it's been quite a challenging year for the economy, it being election year, and then of course we have other issues like the drought and also the interest cap rates. How have the sectors performed, keeping in mind these challenges?
Certainly. It has been a tough second half, I would say. Many, from what we've seen and from people we've been talking to, that some of these, let's say, infrastructure, energy, housing, those types of projects where government is involved have really slowed down. And it's understandable, but it can be a little bit frustrating. In terms of private sector, there's also been some hesitancy. The stock market has gone down. Foreign investors tend to pull money out in election years, and that has happened this year. And then it continued. The money hasn't really come back in the usual cycle because of this, the election uncertainty. But I think at the same time, it creates a lot of opportunities going forward. So we'll see a lot of many of the areas that were highlighted in President Uhuru's speech, things like low-cost housing and healthcare, and I think you mentioned ICT, but these are areas where investment has been fairly steady, but now we've
facilitating value addition will be important. I've spoken to people who say, for instance, power, the question of power and affordable power, not just a lot of power, but affordable power is a big factor in unlocking this.
An interesting thing about that is that the government is actually currently holding a nuclear conference to talk about that. They've been speaking about that for a very long time. But as we wind up, Chris, your views in terms of the sectors that will perform well coming 2018, now that we're wrapping up this year, what are some of the sectors that we expect will perform well?
Sure. I think that financial services, and in particular fintech, there's a lot of interest, there's a lot of demand from investors in that sector, and also it's an area where I think Kenya has a lot of strengths. And also I think FMCG, fast-moving consumer goods, so consumer-focused businesses where, even though the economy was a bit slow this year, the long-term trend is up, incomes are growing, people are demanding higher quality consumer goods. That is an area I think that certain areas like low-cost housing, student housing, there's a clear demand. Now it just remains to be seen, can the returns be attractive to pull in the capital that's required. But those are all areas where I see a lot of potential. And mining, in fact, that's another area.
Thank you very much for that. Well, that's all that we have time here for today. I've been speaking to Kenneth Muchina, who's the CEO of Funguo Investments Limited, as well as Christopher Grun, who's the CEO of Barani Capital. Many thanks for taking your time to join us this afternoon and for that insightful discussion.